Hi, I'm Brooke Thackeray. Thank you for joining me today for a look at the week ahead in the markets. Let's jump right in by taking a look at what's on the calendar. If we take a look here, we can see that it's fairly light from an earnings perspective for major companies, and also too from an economic report standpoint as well. But let's start by taking a look at some of the economic reports. We do see the Case-Shiller coming out on House Index coming out on Tuesday. Interestingly, the expectations are for a 9% increase in house prices year over year in the U.S. Wow, who knew we were in a pandemic? But low interest rates, lots of free money have helped push up house prices overall. API crude stock comes out as well. A lot of investors are focusing on this right now because of some of the drawdowns that have taken place and the movement in price of oil. We do see the Bank of Canada Governor Macklem's speech on Tuesday, and then on Wednesday we see the Fed Powell testimony as well. So we get some input from central banks. New home sales, month over month, January, expected 2.1%. Now, I bring this up because the new home sales prices and the house prices, we're seeing a little bit of a conflicting information as far as that goes. From a seasonal perspective, the home building sector tends to turn down around this time of the year. So something to watch out for. So, the home building sector has done quite well, but if we start to see some lower than expected number in new home sales, permits, those sorts of things, we could actually see the sector actually roll over as well. EIA crude stocks coming out as well. Once again, focus on the drawdowns. On Thursday, this is probably the big number to watch that a lot of investors will be looking at is the durable goods orders month over month, because it really gives an indication in the U.S. if investors are stepping up to buy those long-term purchases as well. We do see jobless claims coming out again. I bring this up, although it's a weekly figure here, because last week the jobless claims was much higher than expected, and it was an influence in the market where the market really did start to pull back because of that weak number as well. So let's take a look. The expected is 820,000 this week as well. Personal income on Friday, personal spending as well. PCE, Personal Consumption Expenditure Inflation Index. Now this is another way of measuring inflation. The market or the average investors or the media tends to use CPI. The Federal Reserve actually prefers PCE. So it's a personal consumption expenditure. We're expecting 1.5%, and also on the core 1.7 as well. If we take a look at some of the earnings, Home Depot, Lowe's coming out this week, give us a little bit of indication as far as the home renovation goes and how well they're handling the costs with the stores in the pandemic as well. NVIDIA. Okay, if we take a look at NVIDIA here, NVIDIA is actually releasing its earnings, and their performance is actually being quite interesting as well. We can see here NVIDIA. This top panel is NVIDIA on an absolute basis. You can see here that's moved sideways basically for quite some time, and it's been moving down relative to the S&P 500, which is the second panel. Recently, it started to uptick as there was a lot of interest in the sector, the chip sector, as they're talking about supply shortages and whatnot. So investors came into the sector, but we did see this downtick just recently as well. So it'll be interesting to see how they respond on their earnings as well. If we go back and take a look at also, too, what we're seeing here is we're seeing the Canadian banks, all the 6 Canadian banks, major banks, reporting this week. I call this Canadian Bank Week. And if we take a look at what's taken place with Canadian banks, I'm going to use the ETF that trades on the Toronto Stock Exchange, ZEB. You can see your Canadian banks, after they initially fell in the pandemic, they've actually outperformed the TSX Composite overall, particularly in its last seasonal period. It did quite well. We have seen that downturn that occurred just recently, and then last week we saw this uptick for Canadian banks relative to the TSX Composite, which is this second panel. And then, by the way, this is the top panel is a nominal, so the absolute, and you can see here that Canadian banks as an aggregate on an equal weighted basis actually made an all-time high last week, and we did see that strong movement relative to the TSX based upon the reflationary trade, rising interest rates, which helps the net interest margins for banks, and Canadian banks actually responded quite well. So the Canadian bank sector actually has a strong seasonal period from late January into mid-April, and right now rising interest rates is favoring that sector. It's also a risk for the sector as well, but something to watch out for. So this week, it's not a huge week as far as major earnings major earnings reports, and also even on the economic front, we don't see some of the big huge movers that we typically see. But nevertheless, here are some of the things to watch out for this week in the marketplace. And the Canadians will be particularly watching out for the Canadian bank earnings as well. Thank you very much for joining me today.